Hello and welcome to Building Solid Foundations Radio on KCAA 1050 AM, 102.3 FM, and 106.5 FM. Also catches on your favorite podcast platform, including Spotify, iHeart, Apple, Spreaker, and others. You can also catch us on Roku on the Building Solid Foundations channel or on YouTube on the Building Solid Foundations channel. Today, we have a fantastic guest in the studio. I've known her for quite a while, and you're going to learn a lot. This is Dr. Janice Bell. Dr. Janice Bell has a background in biotech. She is a research scientist. She has a real estate investing background after that, doing value-add rentals, both in and out of California. And she is involved in private lending, and she actually runs a club with that. We're going to talk about that journey, how she got there, and what it's all about. Welcome, Janice, to Building Solid Foundations.
Thank you for having me, Steve.
So, Janice, I've known you for a while. I believe at least 4 years now. Mm-hmm. Okay. And we both met in a real estate investors club.
Yes.
A local real estate investors club. Yeah. And we were doing very different things, but we found ways to collaborate. So I want to start with giving us your journey. How did you go from research science in the biotech field into doing real estate investing?
Oh, well, thanks for asking that, Steve. When I was working in academia and also in biotech, I had a couple rentals, just something I knew that would be good for the future to have these rentals. And they really weren't anything I knew about investing. I just kept the houses I used to live in when I moved to a new city, kept those as rentals.
So you didn't set out to go buy a place and fix it up and rent it out. You just lived in a place, and when you moved, instead of selling it, you rented it to someone else and created income out of it.
Absolutely. So I had regular, conventional loans that I had taken to buy the place myself. I kept those loans in place and just moved to my new location. And so I ended up with about 3 rentals while I was working.
Okay. And so that throws off a little extra cash flow, which is great. And at some point you shifted out of that business and went full-time into real estate. And how did that come about?
Well, like many of us, it comes about when life throws you curves. I was laid off. They laid off a whole bunch of people in 2003.
Okay.
2003, 2 and 3 in the biotech industry. The market had gone down, and the smaller biotechs couldn't raise capital because there really wasn't any capital on Wall Street to raise. And so they just sort of burned through their money, and then they started, laying people off.
Okay. So you got unceremoniously thrown out the door in 2003, but at that time, the real estate market was doing pretty good. So you took a shift, you had your 3 rentals, and you started expanding from there. Now, I know you had the ones you started, but you started buying other properties as well. Is that correct?
Correct.
So how did you decide what to start with there?
So I started by, from an academic background, read a book and figure it out. I read books and I realized not enough information here. And then I started going to real estate investing clubs. There's several here. We're in San Diego, so I went to a couple clubs, and I listened to speakers. And at that time, speakers would come in and say, oh, we have properties in this state and that state. And so I started following certain speakers and deciding which markets to invest in, because San Diego was pretty pricey at the time.
And
it still is
pretty pricey. It depends how you compare it. So San Diego is definitely pricey compared to what it was. It's pricey compared to most of the country. It's not pricey compared to most of the rest of the coastal real estate along the California coastline, when you compare it to the Bay Area, Orange County, Los Angeles, Central Coast. So in that sense, it's kind of still a bargain, but it's all relative. So
right, exactly.
Right? But it is something that you do need some money to get into. Now, you mentioned you did some reading because you're a research scientist, so you understand how to do research. What kind of things did you read? What kind of information did you go after? Was this reports and technical publications, or were these over-the-shelf books from Barnes & Noble?
I went to the bookstores, Barnes & Noble, found the different books that were on the real estate investing, No Money Down, all those sort of classic books that I read, Lonnie Deal's How to Do Mobile Homes, a lot of different areas, but I wanted more guidance on that. So after I heard some of the speakers, then I started taking training and courses where you'd pay for, a weekend training or, several days during the week, maybe a 5-day. And I started, investing in my education and paying money to be educated so that I would make the right decisions.
And part of that education did not include going and getting a real estate license or a broker's license, correct?
No, I've never been licensed. One thing about being licensed is then you have to declare that you have that experience and license. I'm an investor, so I don't really need a license to be an investor. I'm a buyer.
Yeah, so there's a few things in the real estate investing world that seem counterintuitive. So my partner, who's in Florida, he's my business partner, you know who he is. He started back in the late 80s, and the first thing he did was go out and get his real estate license. And after he did a couple of deals, he realized really quickly it was actually more of a detriment than a benefit to what he was doing because of the fiduciary responsibilities you have and the disclosures you have to do. And so he actually sent his license back to Sacramento and said, forget it, take me off the list, please. And he's been working ever since in real estate without a license. Now, that doesn't mean that you should not look to licensed real estate agents out there. I do encourage anybody watching or listening to this to find experts that can advise you. And if that's a real estate agent, then do that. If that's a tax attorney, do that. If that's a transactional attorney, do that. If that's a CPA, do that. Find your expertise and educate yourself. But don't think that to get into real estate investing, you have to go get a license or brokers or a resale license, because most of the real estate investors I know, like Janice, don't have the licenses, but they work with licensed real estate agents quite often.
Absolutely, and don't get it confused with driving a car. I mean, you definitely need the license for that, but in real estate, you work with someone. Some people get it because they want access to the things on the MLS, the multiple listing service. However, remember that those are priced up because they have to include the commission for the real estate agent. So you're really looking as an investor for off-market properties. And it's not so much the house, it's can you solve a problem for the seller if you're in the buying mode. And also most residential agents think of a house, it has to be empty before you want it because they assume you're going to move in. So I've looked at small multifamilies that are listed by agents. Small would be under 5 units, 1 through 4. And they always say, it will be delivered empty. And I'll say, wait, I don't want it empty.
I want renters.
I want to keep the tenants in
That's
there.
right.
I might move them out over time, but I need the cash flow, when I buy the property. So residential agents, most of them don't understand that. When you get to 5 and above units, then you're looking at usually a commercial agent would be listing those. They understand that it's an income-producing property.
At least 70% rental rate is going on in order to sell that thing. That's what gives you the value, right?
Right, and also the bank won't qualify you for the loan if your vacancy rate goes too high during the loan process.
Right. So if you're buying, let's say, a 3 or 4-plex, and your intent is to use it as a rental, if you have long-term rental agreements with people in there and you take that to the bank when you're trying to get that loan, that actually carries a lot of weight, as opposed to I've got empty buildings and I got to figure out how to fill them and get rent.
Right. You would get the lease from the current leases from the owner at that time. In fact, I did buy, some of the larger units. And when my first one with a 6 unit, it just happened that someone was moving out, and you start with 6 units, you only have so many units to work with in terms of their ratio. So they didn't want me to have less than 4 tenants in when I got the loan. So I made a contract on one of those deals with the owner, and I said, I'm going to put people into these ones as they turn over, because I'm going to be the ones with those tenants at the end. So that was like a side contract. I started putting people into the property so that when I closed on the loan, I had a high enough ratio.
Yeah, and one of the things that we learn as you're going through the books, going to the clubs, taking the training, you learn what's not in the basic principles of real estate type classes or the real estate licensing exam stuff. And it's how to structure deals, how to be flexible, how to talk to people. Basically, you figure out you can do anything in any way as long as it's not illegal or immoral. And that's learning the creativity of it. And a lot of that training comes from those books. It comes from those seminars that are kind of outside the formal education system.
Right. Comes from listening to the older speakers who've structured deals many ways. You can write your agreement on a napkin, a piece of paper is preferable, but then you send it to escrow and they'll write up the contract. If you're licensed as an agent, you pretty much have to use the state form, because of your responsibility to use those forms if you're the principal in the transaction.
And you have mandatory disclosures. Yeah, that's one of the things that, when we go out, we do the same thing you do, just larger land. And when we go out to acquire the land, same thing. It's usually unlisted, and we're talking to people, and we're talking creatively through what do you need? What helps your life be better? Whatever that is. And if that means we can give you some money up front, if that means we can take this burden off your hands, if that means you want to stay in a piece of it and get some cash flow at the back end, whatever it is, we can work with that. As an agent, sometimes your hands are tied because you can't always disclose all the different possible scenarios that are there, but you kind of have to by law to let them know what's going on. So it can actually work against you a little bit. Okay, so you now actually provide training to people. You've turned that around, and you actually offer masterminds. And there's a difference between training and masterminds. Training is you're educating people, and masterminds is you're collaborating and sharing among people actively involved. And so you've built yourself a big network. When we get from the break, I'm going to talk about your shift from just real estate investing into private lending and how that led to you starting your own club. Okay. So I do want to reiterate to everybody out there, find experts for whatever you do. If you're going to get involved in any of this stuff, it's going to affect your taxes. You're going to have legal obligations. You may not understand everything that's written in a contract. So find attorneys that can help you, find accountants that can help you, tax advisors that can help you, real estate agents that can help you, whoever it is that can help you navigate, especially if you're early on. And I do highly recommend getting involved in real estate investing clubs and associations they're places where you go find those people that have expertise. You don't have to just sift through Google and try to figure it out. We're going to have to take a short break. When we come back, we're going to finish with Janice Bell talking about her journey from science into real estate. This is Building Solid Foundations Radio. Don't go anywhere. We'll be right back.
Fire Up Connect is the most innovative business networking group, supporting and collaborating with a dozen of small businesses that are interested in building and establishing strong business connections, hosting educational live seminars while carrying out business and community-driven projects, as well as marketing programs as a part of its membership program. Fire Up Connect also offers virtual assistance with a wide range of services including inbound customer support, chat support, appointment setting and email management, graphic designing, video editing, web design and development, social media marketing, e-commerce solution, content writing and much more. For more information, head on over to www.fireupconnect.com. Fire Up Connect, helping success stories unfold every day.
Hi, this is Steve Matley. As a construction professional, I know the importance of selecting the right contractor for the job. Power Solar employs only professional installers. Power Solar will provide a knowledgeable consultant to help analyze your current electric bill, identify site placement, and correct solar technology for your home. Contact KCAA producer at gmail.com for a free financial savings proposal with no obligation, or call 951-551-1350 and ask for Ken. Again, that's KCAA producer at gmail.com or 951-551-1350 and ask for Ken. Welcome back to Building Solid Foundations Radio. We are in the studio today with Janice Bell, Dr. Janice Bell, PhD. In the first segment, we talked with Janice about her journey going from a research biological scientist into real estate. And Janice, I mentioned before the break that we were going to talk to you about your shifting from just real estate investing into private lending. So first, can you explain to us what private lending means?
Absolutely. So private lending is when two individuals get together and one individual has the money and the other individual has a deal that they want money for. And so privately, the person with the money loans money directly to the person who's doing the deal. There's no bank involved. There's no extra fees. They figure out their own contract and write it up in two different documents before they do the deal.
So this is just a family or a friend, or it could be a stranger, I suppose, that is providing you money instead of you going to the bank and talking to some stranger in a big faceless corporation. You talk to an individual who happens to have money, and instead of them trying to go into the into a savings account or invest something else, that they're going to invest in you, and they're going to loan you money and get higher than the interest they would get at a bank usually if they were putting the money into a savings or something like that.
Right, absolutely. People don't understand, you put money in a bank and you're getting way less than 1% interest these days.
It rounds to zero, yes.
Right, and the bank is lending it out at a higher rate, and that's the rate you see on a mortgage. But they're using the depositors to do that. This way, the person cuts the bank out of the equation. They lend directly to you. It does go through escrow. There's, title insurance and all these other protections. There's hazard insurance, things you need in place to do it. But it's a direct negotiation between you and the person with the money. The person with the money doesn't really have to do the work on the deal. And in fact, when you mentioned directly to you, it's not about your score. It's really about your experience. And what they're lending on is the property, making sure the property will cover the fact that they're lending money, and the property is what delivers the income.
So that's the collateral against the loan. And so and the way to protect yourself on that, if it's real property that you loan money on, is you file the right to lien it, basically, right? You put an encumbrance on it, and that says that if they fail to pay you, you can then be paid out of that property when it sells, or you can foreclose and force a sale.
Yeah, it's the same thing that the banks will do. There's a note which gives the terms of the loan, and then there's a deed of trust in California. In some places it's a mortgage or a different document, but that's recorded at the county saying that there's money owed on this property. So the person doing the deal cannot sell that without paying you off, because escrow and title will look at that and say there's a lien on the property, has to be paid before it goes to a new owner.
So obviously you would want to see what other liens are on the property before you go loan money, because you could be in a position where there's already so much money tied against that property that it's more than it's worth already, which means you're not covered anymore.
Right. And this is why I love to educate people on this, because there are certain things you need to know before you do this. You don't do it on a handshake. You don't just send money to the person's bank account. That's not how it works.
Yeah. And on the flip side of that, if you loan somebody, say, $150,000 on a property that's worth $300,000, the best case scenario is that they pay you off and you get the interest you agreed to, and the worst case scenario is they don't pay you off and you foreclose, and now you have a $300,000 property for $150,000.
Right. If you foreclose on them, then you take over the property. And most investors want to be passive. They don't want that headache, but it does happen.
Yeah, but they can recover and actually make a profit at it. So now you got involved in private lending, and you also help teach people that don't think they have money, that they may have money that they could actually use.
Absolutely. So one of the ways that I started learning a little bit about this is I bought an apartment complex, and because of the way the deal was structured, there were 5 different buildings on different properties. And so the owner ended up carrying back a note, and that really is a loan. So they carried a note just for the down payment on 2 or 3 of the small multi-units, because all the money I was using in a 1031 exchange, which I'll explain in a sec, went into the larger buildings, because it was a total of 47 units. Yeah. So I found out about owner financing because I requested it because the seller carried a note, like $10,000, very small note, on the properties, but he'd owned them already, so he knew that they produced income.
So in that case, the investor who already owns it, instead of getting paid off, goes ahead and becomes the bank for you.
Yes.
Just says, don't pay me all this right now, you'll owe me this, and now I'm the mortgage holder.
Right, and that's really what owner financing means. Even if you buy a house from an older couple and they said, what am I going to do with all this money? I'll put it in the bank and get 0.01%. If they want to lend it to you, then they're going to get their money back over time. So it's a nice way for someone to create income out of a house they already own.
Out of the equity, yeah. They have equity in the house, and they end up transferring the title over and then making income. Now, also you help people to discover money they may have because they have that 401k that was sitting around from that employer. So like in your case, you had a company that said, we don't need you anymore. There's probably a company 401k involved. Once you're not in the company anymore, you can go use those funds if you put them into the right type of account.
True. And so again, it's something you learn from the events in your life. I had the 401k, and I learned about self-directing those funds. And you can move the money from your 401k into a self-directed IRA by a transfer with no tax consequences. And then you can then invest in real estate, individual stocks, whatever you want. Whereas before, when it's a 401k, you're tied to using the mutual funds that your previous employer was providing.
Right. So and you want to check, because some self-directed IRAs are only still mutual funds and those type of things. Other self-directed IRAs allow you to go into real estate. There are regulations the IRS puts out. I don't believe you can invest in collectibles or those kind of things. There are certain restrictions.
Not art, yeah.
Yeah. But you want to, again, experts. Talk to the experts that understand this, the custodians out there that do this. So now you took your private lending experience and you started your own club about 4 years ago, I believe. Is that right?
4 years ago this month, actually.
That's right. Okay. Yeah. And so tell us about Private Lending Masters.
Well, Private Lending Masters .club is a real estate club, and I had worked for a couple of the larger speakers that are on the speaking circuit in real estate. And I was a coach, and I found out, I mean, that's where I get my academic training. How do you get from science to doing what I do? One is I like to teach because that's what I learned. I like to coach individual students. Think of that as the lab. And the other thing is I have analytical skills. And so those skills can be used to analyze the properties. So what I saw was that people didn't know how to find a deal, and they also didn't know how to find the money. And when you can't do either one of those things, you just keep chasing your tail. This is what the students would do that I was coaching. I can't find a deal. I can't find the money. Well, if I find a deal, I don't have the money, so I'm afraid to look for a deal. So my solution with the club was to teach people how to find the money first, and then they feel more comfortable looking for deals because they know the money's already lined up.
Yeah, and sometimes with the deal, if you have the money available, you can get the deal because you have something to work with. Whereas most owners, especially in this market, they're not going to hang on for a couple of weeks while you go find the money because three other people are going to put a better offer in while you're waiting.
Right. So private money, because it is private, it's very direct, and that person's wiring money into escrow directly once they know about the deal. So it's a really good way to get that money. And I know you'll probably ask me later, I'll make that distinguish point that private money is from an individual. There's also other companies that lend to you for properties, and they're hard money lenders. Mm-hmm. So they review the deal on their own and decide if they're going to lend. Those can maybe take a week, 3 days to 7 days. A private lender is really could happen in 1 day.
Right. Okay. And your banks, of course, are taking a while. Banks, you got to qualify and go through the whole process, and that
30 to 45 days.
Up. And if you are putting an offer in on a property in this market that's so competitive, and you can close in 2 weeks, and everybody else can't close for 6 weeks, that gives you a huge advantage if someone wants to sell out.
Yes, and also because of all the residential laws protecting, someone who's going to live in the property, you can't get a bank loan for a property that has certain things wrong with it.
That's right.
So if it has a roof problem, heating problem, hot water, or a stove, if any of those things are missing or broken, a bank will never lend on it.
Because they're not considered habitable at that point.
You can't.
That's right.
It's uninhabitable, even though you're going to fix it anyway. So that's where you go for the hard money and the private money.
So you can get the hard money or private money, do the fix, and then convert it to a conventional mortgage if that's lower interest rate later on. If you
right.
Yeah.
Once all those things are in place. I was looking at a deal last week where they said it's missing a hot water heater. So sometimes, you can use a few $100s, get that hot water heater in there, and then someone could go conventional for it.
So if someone wanted to join your club or attend a meeting, how do they access? Because I know in the pandemic, you lost your meeting space. So how are you meeting nowadays?
Absolutely. So my background being in tech, I wasn't going to wait. I didn't think this thing would be over quickly. I immediately shifted and started doing my meetings online the very first month. In March 2020, right. I went online. A lot of clubs waited a month or two to figure out what was happening. So we went online during the whole pandemic. What I do now, so you can find my club at privatelendingmasters.club.
Okay.
It's a .club, not a .com. But we do in-person meetups at breweries for coffee, lunches, things like that. And then the speaker is online when we do our speaker meetings once a month. And the great part about that is the speakers can be anywhere in the country and the members can be anywhere in the country. So actually the pandemic, allowed us to think differently. I made a shift, and I'm able to expand what I do with my club. Whereas if we were meeting in person, it's all about, can I get there at night? What's the traffic like? Or do I have to be home to,
Right.
feed
And
my
did
kids?
I have dinner? Yeah, exactly. Okay, so privatelendingmasters.club if you're interested in learning how to attend one of these meetings. We're going to have to take another short break. When we come back, we're going to talk to Janice about one of her new offerings, which is some real estate investing funds. This is Steve Matley on Building Solid Foundations Radio, talking to Dr. Janice Bell. We'll be right back.
Fire Up Connect is the most innovative business networking group, supporting and collaborating with a dozen of small businesses that are interested in building and establishing strong business connections, hosting educational live seminars while carrying out business and community-driven projects, as well as marketing programs as a part of its membership program. Fire Up Connect also offers virtual assistance with a wide range of services including inbound customer support, chat support, appointment setting and email management, graphic designing, video editing, web design and development, social media marketing, e-commerce solution, content writing and much more. For more information, head on over to www.fireupconnect.com. Fire Up Connect, helping success stories unfold every day.
Real Men of Real Estate with Steve Matley, construction manager and real estate developer, business owner, and educator.
Did you know that right now there's 22,000 units deficit?
Tunde Ogunwale, real estate development professional, Naval Academy grad, and veteran with a deep understanding of the public sector process.
All of us want to live in thriving communities.
Brian Fox, real estate expert and investor, dedicated to helping hundreds of clients make money in real estate every year.
There's so much housing going in.
The builders are begging for more land.
Future company can come in, lease up space to employ those people who are living in the homes.
We have to put the housing in place.
But either we either have to have houses,
They want to make sure that there's a strong employment.
logistics centers, things like information hubs. We are a shipping economy now. There's economies all over the country where their prices are doubling and tripling.
Hi, this is Steve Matley. As a construction professional, I know the importance of selecting the right contractor for the job. Power Solar employs only professional installers. Power Solar will provide a knowledgeable consultant to help analyze your current electric bill, identify site placement, and correct solar technology for your home. Contact KCAA Producer at gmail.com for a free financial savings proposal with no obligation, or call 951-551-1350 and ask for Ken. Again, that's KCAA Producer at gmail.com or 951-551-1350 and ask for Ken. Welcome back to Building Solid Foundations Radio. This is Steve Matley. Today I have Dr. Janice Bell. We've been talking about real estate investing, private lending, and Janice's journey going from the scientific community into the real estate community. And Janice, the next thing I want to talk to you about is you've evolved from just doing basic rentals to building a little bigger portfolio to learning how to do more elaborate deals to doing private lending to teaching other people, starting masterminds. And now you're actually putting together opportunities for other people to collaborate with you to fund projects. So if they're not sure where to go or how to get into real estate investing, you have a place where they can safely put a small amount of their money to put their toe in the water and see how that works without having to buy a place, negotiate their own contracts, go to Home Depot and buy all the stuff, do all the work, try to find a seller or property manage things. So tell us a little bit about what your new endeavors are there.
Okay, absolutely, Steve. So, as most investors start out with your basic rentals, then I moved into, the larger sort of apartment complex rentals. And then when the recession happened, I started doing flips because that's what was available to do here. So learning flips, learning to invest out of state, what markets are good. Did flips here in San Diego as well as in other markets like Phoenix and Sacramento. And just wanting to, once I saw how the funding worked, it seemed like that was a great way to expand a club because I know how long it takes to learn all that information. If you can invest with someone who already has the expertise, even while you still have your W-2 job, because a lot of the people who come to my club are engineers. They can be working in tech, biotech. They can really be working anywhere. But what happens is maybe they left an employer and moved to another employer, and they have 3 or 4 old 401ks sitting there. What I do is educate them on how to consolidate all those into an IRA so they can invest. And what I like to do is bring in a speaker who's an expert in their area, whether it's your area like land development, apartments, notes, out-of-state markets, even a rental pool. And because that speaker's focused then on what they do the best, then the investor who's passive and still working can come in and put their money into a deal and be getting a return on that deal where they can turn it over every 2 or 3 years and go into a different type of investing.
Right. Okay. And you and I have worked together on some of these things. Now, back when you first started 4 years ago, just a few months after you started your club, you actually had invited me to come speak at your club.
Absolutely.
And it was a fledgling club at the time. And I remember when I spoke, it was right after Thanksgiving, I believe. It was right after holiday. And of course, most people don't want to go to club meetings right after holiday, right? It's Christmas time now. You just got finished with Thanksgiving. And it was a small turnout. But what I learned about your club was, it's not about going there because there's hundreds of people. It's going there because there is maybe a dozen people that are serious. Mm-hmm. And you get more than that sometimes at your clubs. I mean, you'll get a few dozen there sometimes. But even at that club where because of the timing of it, it was a small group, the people in there were all serious. And of those, that small group, the 90% of them that were there that night are still investors with me. And I know they invest in other things too.
Right.
And they're there because you helped teach them how to find money, how to vet projects, how to vet the managers of the projects, how to figure things out. And they are putting money in and it's working for them. I've actually had, some of them have been in projects that have already closed out and they've made quite a lot of money from our project, which is great. We love helping people out like that. And so I know you've got more of those coming up. Now, if somebody who's interested in that, I know here we're not selling any specific projects. Don't take that the wrong way. If you're out there listening to this, we're not selling anything here. Mm-hmm. It's just really education. But a lot of people don't know those opportunities exist. They don't know that there's ways you can get involved in real estate without having to go buy your own property, come up with tens or hundreds of thousands of dollars out of pocket to get into it, do all that work, figure everything out, and then at the end of it find out that what they taught you on HGTV didn't work for you and you lost money. So that's a hard way to learn. When you collaborate with other people and you go into kind of a fund, a lot of people with a small amount of money equals enough money to do a good deal. And they all share the risk, and you have a very small amount of risk, and you don't have to know the expertise because the person running the deal has the expertise. But now there again, do your homework and make sure they do. Do your research. Don't just assume because somebody says they know what they're doing. Look at their history, talk to people, look at the research, cyber stalk them a lot, figure things out, right? There's information out there. We live in a fantastic age where it's really hard for people to hide their sins of the past, right? So you can find these things out. So if you're interested in that, again, connect with Janice, privatelendingmasters.club. And I strongly encourage you to try to attend one of her virtual meetings, or if you're anywhere in the Southern California area, it's worth the drive to go to one of her quarterly meetups that she does sometimes at microbrews and other restaurants and places like that where there's a fun environment.
Right. You can also find us on Private Lending Masters on Meetup.
Okay.
And you have to make sure that you kind of hit San Diego when you're looking for the location. Even though we're online, say if you're in another city, you can still listen to it there. Exactly. And, I guess what I'd say about the lending is that a lot of people want to be able, even mobile home parks, storage units. So I usually have speakers in a broad variety of areas in land development, like what you do, building, apartment buildings, or value add, where people will take an older apartment building and renovate it. So there's many opportunities. Just understand it's not a REIT, it's not a publicly traded deal like you might find in a REIT. It's really direct lending to the person who's operating, the operator, who's doing the actual deal.
Right, and then there's quite a selection of them out there. As you mentioned, there's people that do value add apartment buildings. They'll buy these apartments using that fund, they fix them up, and then they raise all the rents because that's a nicer building now.
Yeah.
And so now they've that's where they're getting their cash flow from. There are people that do this to do a series of fix and flip homes, or maybe you're funding people that are adding ADUs to the back of their rental properties, and they need to borrow that money.
Right, and they're expert in that area. One of the another one of my speakers has a pool of rental properties in the Midwest, and you can invest in that. So instead of you buying that one house, and when it's vacant, you have no income, your investment is spread out over 50 different rental properties that are professionally
like a
managed.
mutual fund of real estate portfolios. Yeah, exactly. So,
and it's really something that it's in the IRS code that you can use your IRA money to do this. Most people just don't know about it, and they ask the question, why don't I? Because the stock funds in the stock market, they pay for advertising because they want you to, go with them and pay their fees. And I'm not saying don't invest in the stocks. We do the same thing ourselves. But it's just another avenue to diversify what you have, and you just do get a much better return.
Yeah, and I'd say over the last 2 years, people in the stock market investing probably have made somewhere in the tune of 3 to 4% return, I'm guessing, because it's been up and down all over the place. The stock market's very liquid. Anything that's liquid emotionally reacts to things. So when there's pandemics that happen across the world, when there's invasions on the other side of the world, these type of things affect it. It acts like an undisciplined 2-year-old. Where the real estate market is so non-liquid, it takes a while. I can't call somebody up today and say, sell all my real estate, and it's not done by tonight. It's going to take a while, and I have a lot of opportunity to change my mind and say, that was a bad, stupid thing I did. I'm going to retract that now. I don't want to sell it after all. And so I have a chance to correct that. I'm not making emotional decisions then. It becomes more logical. And the real estate market has a lot more inertia to it. Now, having said that, when it does turn, it takes a lot longer to turn around again for the same reasons as we saw in the last, a decade ago or so. But it's been doing very, very well. And so for people that have their retirement money and all they can do is a stock market, they've been on a bit of a roller coaster, and in the last few weeks they've shed a few tears. Mm-hmm. I would say the same thing if you're into the cyber currency market. You had your ups and downs. That's a real roller coaster. It's big thrills up and real spills coming down.
And that's open 24/7. So
exactly.
You can check that on the weekend and still see it go.
And just grow your ulcers every minute. Yeah.
And one thing I'll say about the stock market, and people will say, well, the average is, it goes up 7.5% a year. But what that doesn't factor in is when it goes down and you start from the bottom. So just from a math point of view, 7.5% is each year. Say it goes up 31 year and down 20. It's an average. But when you say you have 100,000 and it drops to 50,000, then what they're talking about is 7.5% on the 50,000.
That's right.
So when you do that average, it's not really considering the losses that you had in between. It's much lower.
It takes twice as much a percent in growth as it does in loss to make up the same difference. Exactly. Yeah.
People don't realize that. They just think of that number, and it's not consistent.
It's not consistent. Now, I'm not saying don't invest in stocks. I have stocks. I have mutual funds. Yeah. I have precious metals. I have lots of different things out there. Real estate's where I really make most of my money because it's what I understand, and it's what I like, and it's what works. The process of managing funds, now you manage some of your own funds, but you also help people get into funds that are not managed by yourself as well.
Correct.
Right.
Correct. So I help people get into, with any of my speakers, if a speaker is doing a value add apartment building that, I may not be investing in it, but my speaker has it, and I coach people through how to get that money from their old 401k into the IRA that has a company that's managing that money, and then how to get that money into the investment. So it's more of a coaching thing that I do for those particular people if I'm not the one running the project.
Right. Mm-hmm. And it's good you have both, because you're not forcing people into something because you are managing it. You have options. Say, look, I've got these I've got going, but there's all these over here too. And what do you like? Do you like notes? Do you like apartment buildings? Are you more comfortable with, flips? We're going to take another short break, and we come back. We're gonna wrap up our last segment. Just kind of summarize a few things here. This is Dr. Janice Bell, my guest today on Building Solid Foundations Radio. We're talking about real estate investing and private lending. And this is Steve Matley, your host. We'll be right back after this.
Fire Up Connect is the most innovative business networking group, supporting and collaborating with a dozen of small businesses that are interested in building and establishing strong business connections, hosting educational live seminars while carrying out business and community-driven projects, as well as marketing programs as a part of its membership program. Fire Up Connect also offers virtual assistance with a wide range of services including inbound customer support, chat support, appointment setting and email management, graphic designing, video editing, web design and development, social media marketing, e-commerce solution, content writing and much more. For more information, head on over to www.fireupconnect.com. Fire Up Connect, helping success stories unfold every day.
Hi, this is Steve Matley. As a construction professional, I know the importance of selecting the right contractor for the job. Power Solar employs only professional installers. Power Solar will provide a knowledgeable consultant to help analyze your current electric bill, identify site placement, and correct solar technology for your home. Contact KCAA Producer at gmail.com for a free financial savings proposal with no obligation, or call 951-551-1350 and ask for Ken. Again, that's KCAA Producer at gmail.com or 951-551-1350 and ask for Ken. Welcome back to Building Solid Foundations Radio. This is your host, Steve Matley. We are talking today to Dr. Janice Bell. We've been talking about private lending, real estate investing, and funds. And Janice, you just had a meeting this past Thursday and you invited me to be your guest. And that's exactly what we were talking about. We were discussing the type of funds that my company does, which is investing in raw land entitlement projects. We're doing mostly out of state now, Arizona, Florida, those areas. And we were discussing that. So the reason I bring that up is for people that want to access the privatelendingmasters.club, Janice will be starting to put up recordings, segments of the recordings of those meetings and those presentations on her website coming soon. So you'll want to check in with that and be able to access that. Or you can contact her through there and you can contact her directly and she can help point you to the people that can help you understand those things.
Yeah. I was going to say my best way to contact me is janicebell.me. Very simple.
Janicebell.me.
Janicebell.me. And
Okay.
I have my YouTube channel. So there's also segments that the speakers have on my YouTube channel. So you don't have to learn all the names. My YouTube channel is Wise Wealth University.
Okay.
However, everything's on janicebell.me, the club, the passive lending masterclass, my Instagram account, all those things, even my calendar schedule, if you want to schedule a strategy call. Just go to janicebell.me and there's about 8 links of where to find me on social media.
Fantastic. So that leads us into what I want to talk about next, and that is where do you find information? Who do you collaborate with? So 2 questions. One, who did you collaborate with to get to where you are, and who do you recommend that our listeners and our viewers would collaborate with if they're interested in getting involved?
Okay, so specifically, if we're going to talk about, say, a deal with you, because basically I have 12 speakers that I can have every year, and each one really invests in a different type of investing. And so it gives my members an opportunity to hear different speakers. I also use a texting service so that they can get the information from the speaker directly and then go ahead and invest. So I suggest going to your local real estate clubs. A lot of them are back meeting in person now, and find a mentor, but then check with other people in the room. Hey, do you know anyone who's invested with them? Don't jump in quickly and invest with someone that you really haven't vetted and checked their background. Because the most important thing about the deal is probably going to work in some way or the other form if they have it. But you need to really vet the person who's running the deal. And I do teach people in a master class how to do that. and how to look into the person's background and make sure that they're legitimate and that they have returned the money from their investors in the past.
Yeah, and actually there are some clubs that actually, as a part of the membership, they include things like skip tracing applications and those things where you can use that, one, to find property owners if you're looking to invest, but you can also use it to vet people because it will show if there's criminal history or those type of things out there.
Yeah.
And it's good to do that, and because before you give somebody your hard-earned money to invest, and yes, if you're going to invest, you're putting money in that you are prepared to lose if everything goes wrong. You do not use your mortgage money, you don't use your grocery money, you don't use your kids' college tuition. You use money that you have to invest and try to help grow, and you understand that the world is unpredictable. Things can happen. But having said that, before you give that to anybody, you make sure that you have the highest probability of success by starting with people that you believe you can trust based upon a solid track record.
Yeah. And one thing I always tell people is it's going to cost you to invest. So there's two ways that it's going to cost you. You either spend money for the education and the training to do it the right way, or you lose money in a mistake. In a mistake, you're going to lose money in that because you invested the wrong way. You're going to choose which way do you want it. So if you're hesitant to pay the money for the training, you'll probably lose the money in a mistake. And actually, the training is cheaper than the mistake.
Right. So there's two. So the biggest risk, the single biggest risk in real estate investing or any other kind of investing is lack of information. It's not the knowledge isn't there. And there's the old saying that good judgment comes from experience, which came from bad judgment, right? Okay, so,
Absolutely.
So you mentioned, yes, you want to fully vet people and make sure you don't make those mistakes. Go through the training, understand as much as you can. At the same time, part of vetting is partnering with people who have the experience that you don't have yet. See, you can always put a smaller amount of money in and allow people that have already been through those landmines and have learned a lot of that to manage that on your behalf. And there's nothing wrong with kind of peeking over the shoulder and seeing what they're doing a little bit and taking some notes. You can always ask questions. Now, that's one thing I tell people. If you have someone you're investing with and they want to keep everything close to the vest, not share anything, that's kind of a red flag. We have investors all the time that say, well, can you show me what you do? I say, well, one, I don't have time to do that for everybody that asks, what do you bring into the party? If you're one of our investors and you want to see what's going on, I've got no problem with that. If you're bringing investors to us, you want to see what's going on. We're not doing anything secret. We're not doing anything proprietary. It's just not all that well known, but we're not hiding anything. And the pie's so big, everybody could do this and still make money, I think.
Yeah, and there's platforms out there for, fund me type sites where you can invest money in different projects. And I would say, usually the minimum might be $25,000. Invest in a couple different places.
Yep.
Just like diversification, don't take 150 and invest it in one project, but just do it slowly and vet the person who's in charge of it.
Right, and we do that. We have sometimes a large investor will come forward and will say, how about we, instead of putting all this in one project, how about we break you up into 3 or 4 different things? And that way, if for some strange reason one goes sideways, we're still okay. Haven't had that problem, but that doesn't mean it can't happen because we live in an unpredictable world. So Janice, we're starting to wind down. Do you have any last thoughts or last things you want to share with our listeners?
I would say get the education, go to local clubs. I told one of my coaching students, you need to go to your local club, and he was the next county away. He went to the club, and then I was there because I'll drive to clubs to hear different speakers. So some of them are online now. Bigger Pockets is a great website where you can hear speakers. You can get on the forums there and ask people, what should I do about this? So there's a lot of information out there. Spend the time to educate yourself. Education's important. And then ask other people in your club to verify that person for you, just to check.
Great. It's great advice, Janice. So privatelendingmasters.club, or you can go to Wise Wealth University on YouTube, or you can email janicebell.me, and you can get information from Janice. This is Building Solid Foundations Radio, KCAA, 1050 AM, 102.3 FM, and 106.5 FM. We're coming to you once a week with hopefully what's interesting information. Janice, I want to thank you for being on the show today and sharing your extreme knowledge and experience with us. We'll be back next week. This is Steve Matley, your host. Don't miss the next show. We'll see you next time on Building Solid Foundations.
with 60 years of fascinating facts. This is the man from yesterday. And back in time we go to this time in 1964. The Beatles have 6 songs in the top 30, including Do You Want to Know a Secret? Another British band is breaking through. They're called The Searchers. That band got its name from a John Wayne movie. Here is Sugar and Spice.
Sugar and spice and all things nice, kisses sweeter than wine. Sugar and spice and all things nice, you know that little girl is mine.
And from this time in 1974, looks like NBC is adding The Rockford Files starring James Garner from the world premiere movie shown just a few weeks ago. Also being added, Little House on the Prairie starring Michael Landon from the recent high-rated TV movie.
This is Jim Rockford. At the tone, leave your name and message. I'll get back to you.
Hi, Jim. Thanks for the dinner invitation. I'd love to, but does it have to be the taco stand?
And from this time in 1957, NBC TV says it is experimenting with the new videotape on some of its more important shows. Among them, The Steve Allen Show, Caesar's Hour starring Sid Caesar, and the Sunday night Dinah Shore Chevy Show.
Chevrolet, in behalf of your local authorized Chevrolet dealer, presents live from Hollywood, the Dinah Shore Chevy Show.
With more at manfromyesterday.com.
We've got the Academy Awards, the Emmys, and Grammys. But what should we call the award for the most extraordinary performance by a corporate profiteer? How about the Sleazy, with winners getting a solid gold sculpture of a middle finger? There were so many worthy contenders, but one corporation exhibited uncommon callousness, so the 2021 Sleazy goes to Tyson Foods. The meatpacking giant has regularly run roughshod over workers, farmers, communities, and the environment, not to mention the millions of animals it fattens and slaughters. But the coronavirus pulled out the worst in Tyson's corporate ethic. Last April, its billionaire chair, John Tyson, ranted that health officials who were closing down several of his slaughterhouses that had become hotbeds of contagion were creating another crisis, a national meat shortage. Responding instantly, our corporate compassionate, burger-gobbling president decreed that meatpacking plants were crucial to America's national security and must be kept open at all cost. Trump's edict required workers to return to their jobs or be fired. Only there was no meat shortage. Indeed, Tyson and other giants actually increased their meat exports to China last year. Meanwhile, COVID rampaged through Tyson's factories. In its Waterloo, Iowa facility alone, 1/3 of the processing workers were infected and at least 6 died. Which brings us to the corporate play that cinched this year's Sleazy for Tyson. Waterloo slaughterhouse supervisors actually knew that the back-to-work order would sicken hundreds, but not exactly how many. So, managers organized a winner-take-all betting pool on the percent of employees who would test positive. It was simply something fun, said one, kind of a morale boost. This is Jim Hightower saying the virus infected more than 1/3 of the workers in the plant. Some fun, huh?
You're on board KCAA's Inland Talk Express. KCAA, Loma Linda, 1050 AM, the station that leaves no listener behind.
NBC News Radio, I'm Brian Shook. The White House is stepping around questions about whether it's needling or poking the Russian bear. Communications Director Kate Bedingfield defended the ongoing release of intelligence tidbits during the Russian invasion of Ukraine. She said the releases highlight Russian President Putin's strategic blunder. Meantime, President Biden is making moves to get soaring gas prices down.
For U.S. oil companies that are recording their largest profits in years, they can put those profits to productive use by producing more oils, restarting idle wells, or producing